Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. First, I'd like to wish you all a very happy new year and welcome to 2019. And as the first video of this year, I'd like to have a look at a great example of our Wave 3 or W3 trade setup that's unfolded on one of the Indian markets out there, the Nifty. But you can apply the same to any markets in any time frame. But as usual, let's start with our risk disclaimer. And just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing, or put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. This is for any approach you use to the markets, there always will be losing trades, and it's important to understand and accept that. Right, let's have a look at a 3-minute chart of the Nifty. This is an index over there in India, and have a look at our W3 or Wave 3 trade setup that unfolded earlier today, which is the 2nd of January 2019. So I'd just like to go over quickly what this W3 trade setup is and show you why we like it in MTPredictor. The W3 trade setup is basically a Wave 3, and in Elliott wave terms what we're looking to do is we're looking to catch the Wave 3 swings. If I come down here to the bottom, I right mouse click, I do Elliott wave major, you can see what we're looking to do is trade the Wave 3. Why do we like this? Well, typically in a completed 5-wave sequence, the Wave 3 is the longest and strongest swing in a completed 5-wave sequence, therefore represents the largest profit potential with the smallest initial risk. So the idea of the trade setup is to get you in at the start of the Wave 3 to then be able to trade the Wave 3. If I clear this all off, I just right mouse click over this red cell bar at our TS1 W3 trade setup and I place analysis. You can see this is why we like it, is because this would have allowed you to enter a short trade here. Remember, we use position sizing to vary the number of lots, contracts or shares to keep your initial risk small, and then we're looking to trade the Wave 3. Because of that, we're looking to go to our typical Wave 3 WPT or wave price target, and in this case you can see the market decline nicely, and the profit at this Wave 3 target would have been approximately 16 times the initial risk. This is why we like this, not because these have a high percentage of being right, it's because when they're wrong, position sizing keeps the loss small, but when they're right, because the Wave 3 is usually the strongest and longest, the profit is large, but just not large in dollars or rupees in this case, but large in relation to the initial risk. And here this profit was approximately 16 times greater than the initial risk required to take the trade. So how do we find these? Well, one of the drawbacks of Elliott wave as it's traditionally taught is that it's basically Elliott wave patterns tend to break down more times than we'd like, and so what I did years ago is basically looked at the markets and basically discovered that about half the time they're random. So in other words, half the time you can't place an Elliott wave count on the chart because it's random. So the question being is, now how can we then look at or find a time when the market is less random or in a clearer or more predictable pattern? And for this we go to our higher time frame chart. So for this you look at a time frame between 3 and 5 time frames higher. So if you're on a 3-minute chart, you'd go out to the 15-minute chart. If you're on, say, a 15-minute forex, you go out to the hourly. If you're trading daily stocks, you go out to the weekly. And what we're looking to do is see whether the market makes a meaningful reversal at higher time frame support and resistance. So I'm just going to use our training mode and go back to about halfway through the day before and show you that here was the last pivot. Can you see there's a swing pivot here? This was the last move down into this TS4 low, and this was the last swing pivot. So if I right mouse click here, do decision point, can you see how that gave you an area of potential resistance on this higher time frame chart, but how it was on the chart in advance? It was there before the market even got there. If I turn training mode off, can you see how the market then went up and made a high at that resistance level? So now if we come down to our shorter time frame chart and see how it looks, can you see here how the market made a meaningful reversal off this higher time frame resistance? So in other words, we're looking to start our Elliott wave sequence here. So in other words, we're looking to see whether the market is now in a bit more of a clearer or predictable pattern. So this is the clear 50%. I'll just use our training mode as well to go back to see what it looked like just before, which is about there. And this is what we're looking like at the time. So the market made a meaningful reversal, so we start our Elliott wave sequence here. The market made an initial decline down. In Elliott wave terms, that would be a wave 1. The market made an initial correction, and we're looking for that correction to subdivide into a minor ABC. So if I right mouse click, do Elliott wave minor, you can see there's our ABC pattern into the first correction, which would be a wave 2. So this would be a potential area where wave 2 would look to end. We're looking to then do our wave 3. If I right mouse click and do Elliott wave analysis, you can see there was a potential trade setup on this bar. If we move forward one bar ahead, you can see that it actually made a new high. It made a new high through the initial stop trigger without going through the entry trigger. Therefore, this setup was invalidated. If I clear everything off, and we had another potential trade setup here. So we repeat the process. Right mouse click over the red cell bar and do analysis. You'll also note that our MTP trend, which is our color-coded trend indicator at the bottom, has also gone red to indicate the large degree trend was down. If I now go forward, you can see that that would now have gone through your sell trigger. So in other words, would have initiated you into a new short trade. But can you see how this is all set up? By the market making a meaningful reversal at higher time frame resistance. In other words, 2 time frames were coming in to tell you the same thing. And that's what we do when the market becomes clear. If we turn the trading mode off, you can see that was our setup, with the market coming down to the typical wave 3 WPT, as we've already seen, where a nice profit of approximately 16, just over 16 times the initial risk was available. So that's the difference in MTPredictor. First of all, we understand that markets are random about half the time. So in other words, you should not be trying to do any kind of analysis, no matter what it is, on the markets about half the time. They're basically random. You know, they're like driving in fog. You can't see where you're going. So the trick is basically waiting until the picture becomes clear. In other words, letting the market come to you. Don't try and do analysis all the time. And what we do in MTPredictor is we then use our higher time frame DPs, and you can see here's our 15-minute resistance on this 3-minute chart. So when the market makes a meaningful reversal off one of these levels, we then deem that the market is starting to get into a clearer pattern. And our W3 trade setup is where we have the initial move off that resistance area, in this case, or as it's a high. That initial decline will be considered a wave 2. We're then looking for the initial correction. If I perhaps take this all off and I do an Elliott wave minor here, so the initial correction to unfold into an ABC, which is the typical pattern in a wave 2. If I just put the Elliott wave pattern back on there, you can see that's in a wave 2. So that's the pattern we're looking for, an ABC in the first correction after the initial move off an important high or low. We're then looking to trade the wave 3. Why do we like that? Because the wave 3 is typically the strongest and longest in a completed 5-wave sequence. So if I now do our analysis on that red cell bar, you can see that gives you a potential profit which is much larger than the losses. Remember, losing trades can and will always happen. That's what I said right at the start. So the reason we like this is not because it has a high percentage of winners, but when the losers come through, and there always will be losing trades, the losses are kept small. This is why we have our position sizing to vary the number of lots, contracts or shares to keep your initial risk small. But because this wave 3 is the strongest wave in a completed 5-wave sequence, the move is normally large, but not large just in rupees in this case, or dollars if you're trading other markets, but large in relation to the initial risk. So that's why we like this particular trade setup in MTPredictor, and it's one of our favorite trade setups, and it's why MTPredictor was basically designed in the first place back in 2001. So what we're in our 19th year now of MTPredictor, so it's been going a long time, and it's why we like this, and it's one of our favorite trade setups because it has the potential to have a large profit in relation to the small initial risk. So that's the W3 or wave 3 trade setup outlined in MTPredictor, and a great example unfolding here on a 3-minute chart of the Nifty. These trade setups are not restricted to short time frames like this. You can they unfold on longer time forex trades, daily charts, whatever time frames you're looking at. If you look at the rest of our website, you'll see there's lots of other examples on different markets and different time frames. But I thought this was a great one to share today to start the year with a new trade setup like this in 2019. So again, happy new year to everybody, and just finishing off with showing you why this is such a great setup in MTPredictor. So that's the W3 or wave 3 trade setup in MTPredictor.